Perfect. And we are recording as well. So first of all, great overview there, Nico. Thanks for sharing a lot of good analysis for a lot of good tokens and really just explaining the importance of focusing on those outperformers, those revenue generating protocols, and also looking at the pairing charts, such as tokens compared against Ethereum or tokens compared against Bitcoin, because that actually matters a lot. And it's an alpha piece that most people aren't looking at. So again, thank you for that. But let's real quick go over the market. Let's go over a quick market overview because like Nico was saying earlier, I know the market has not been fun the past few weeks, even past few months. I mean, since October 10th, everything's just been a little off, right? And we've seen a lot of institutions get liquidated. We've seen obviously a lot of players get liquidated, and let's kind of cover as well what levels I'm looking at, as well as a few big news items as to why all of this is happening and what I'm looking forward to as far as clearing some of that uncertainty and then looking for those opportunities as potentially we go lower. So first of all, looking at the past 24 hours here, 2.57 billion of liquidations. And here's the thing, I think I speak for everyone when I can say these liquidation amounts, they're not as accurate anymore as far as timing bottoms, right? Before it used to be, okay, we have $1 billion liquidations, mark local bottom within 1 to 3 days. Obviously that's not been the case considering we've had over $1 billion of liquidations at least 2 to 3 times over the past few weeks. And so it's not as easy as saying, well, a lot of people are liquidated, fear and greed is in the gutter, and now, okay, let's buy. Because either A, a lot of institutions are getting blown out right now, or B, there's a large entity that's been selling, covering their positions, or C, there's people on the inside who know that something big is about to happen, so they're selling ahead of time, which we'll talk about some potential tensions with US and Iran recently. But there's something going on in the background that is non-standard because a lot of us have been looking for lower for Bitcoin. GE was talking about lower for a while. He had targets even as low as 60K, but the speed at which this has been happening is definitely non-standard. I mean, I would expect 60K, but by potentially April or May, not by the beginning of February, right? And so this has even caught me off guard, just the speed of these liquidations. And I think it is liquidations as far as people trying to time the bottom. And that's why you can see, while these indicators are oversold, while we do have, extreme fear below 10 right now, it's not matching up with price bouncing. And again, we'll go over a few more reasons why that is. But this is just something in general to see that it's not just you getting liquidated. Literally everyone is getting liquidated. $2.5 billion over the past 24 hours, even $1.6 billion over the past 12 hours. It is hard to believe that there's that much liquidity being burned right now. But matter of the fact is a lot of people are trying to time it and they are getting blown out. Now, with that said, standard pivot points do work. And this kind of goes into those higher time frame support levels. Now, another piece to consider is, I know we talk about a lot, looking at those major support levels on the daily or weekly timeframes. Well, when you have this cascade of liquidations, daily timeframes are thrown out the door. Like that no longer is an accurate measurement of a reversal. You're looking, even the weekly isn't as strong. Now you're looking at the monthly, now you're looking at the yearly pivots. Those are the ones that big institutions focus on because that's where the long-term value comes in. And so when you see these levels, there's a lot of liquidity at 60.7K. If we go to the 1 week liquidation, you can see that again, there's some liquidity down here. And then if you go to the 1 month liquidation levels, you can see we did still have a little bit of liquidation down here. But matter of the fact was that we had a lot of liquidity near 60K. One of the big reasons for that was we had the 200 weekly SMA that's at 58K. So a lot of people, again, trying to front run that. And even earlier, I mean, we had a lot of people trying to long above 69K. And then once that support level actually crashed through, then it became resistance and you had a lot of people shorting at 69K. Because I know a lot of top traders who are actually longing around 70K, thinking 69K was getting front ran. And initially it did. See this bounce that we had here in February 5th? I mean, you can see earlier today, it bounced above it, but then once it crashed through it, treat it as resistance, then we just crashed. Okay, so again, you have to look at these levels, and we'll pull up volume profile as well, so you can see another metric that's very accurate in looking at support or supply and demand zones. But this 60K was a big level. It got ticked down, and then now potentially we could end up forming a bottom there. So that is at least a good sign, but now we have liquidity down there again, so it could get tagged one more time. But let's go ahead and look at a few big news items because a lot has happened this week, and we'll cover some big reasons why I do believe that we are dropping, besides just the standard, institutions and everyone else getting blown out. So a few big things is the tensions between the U.S. and Iran have been escalating a little bit. I do know that on Friday, Trump is going to meet with the Iranian president in Oman, and they're going to have a talk. So literally tomorrow, depending where you're at in the world, or today. But you can see here, if we scroll down, there was actually some news that came out about Trump telling everyone in Iran, all the citizens, to leave it. So I need to see if Remarks has looks like they don't have an article on this, but let me go ahead and actually pull it up because I did see it in a few places. Okay, so here we go. So we had the U.S. Embassy urging citizens to leave Iran now. So again, and this was literally 34 minutes ago. You also had a few others that were mentioning this, but there were a few people that were saying that even here on the news, U.S. urges Americans to leave Iran immediately amid protests and blackouts. So there's a lot of stuff going on. Is there going to be a strike on Iran? I mean, they're supposed to have some talks later today. That may not be the case now, but that is also something that potentially could be a reason for the drop that we had. And obviously there is some tensions regarding another government shutdown by February 14th because the spending bill comes up for another vote for DHS, Department of Homeland Security, on February 13th. And then also some FUD around the Fed chair that Trump nominated, Kevin Warsh. He is pro rate cuts, but he is anti-QE, quantitative easing. So basically saying that he is not willing to just inject liquidity into the market just because. He actually has to have a reason for it. And so, again, there's pros and cons to that, but there's just a lot of uncertainty in the market. And obviously pair that with, other reasons of the markets being overheated, stock market starting to curl over, commodities being overheated. You had silver actually dropping a lot, which we can look at that real quick. So you can see the S&P literally tanking earlier today, 67.98, as the RSI rejects off its signal line on the weekly, goes down to the support level 56, but looking for 66.30 here. And then gold also tanked to 45.30 the other day. Now it's at 48.44. But there is actually, you can see here, silver. So let me go ahead and actually look at this real quick. So there is a silver one, if I can double check it. Okay. So you can see silver here, right? It reached 120 and literally tanked all the way down to $73. If we go to the daily chart, you can see pretty much over a week, it went from 120 to 73. So almost a 40% drop in the span of a week on a commodity. That is unheard of. And so a couple reasons for this. There's a lot of countries buying silver, and China was one of them. And it was a lot of artificial demand, you could say. So it wasn't natural, organic demand, and that's why we saw a sell-off afterwards. But a lot of these things have kind of compounded on top of each other, with the S&P being overheated, commodities being overheated, crypto being overheated. Now everything's curling back. And that's something as well to keep in mind is when you have all these indications of, the indicators being overbought on the monthly or weekly and then finally resetting, it's going to pull down everything else. And there was also another argument that I saw, or another reason, is Bitcoin used to be a finite supply of 21 million. Used to be. And then you had things such as perpetual futures and synthetic assets being created. Now, where have you heard synthetic assets before? That was in the 2008 financial crisis, right? That was I'm trying to think of the word for it. Was it the credit default swaps, or there was another term for it? Mortgage-backed securities. Yeah. So basically, it was the synthetic CDOs. That's what it was. So synthetic CDOs, which basically was, for example, say, and they used this example in the movie The Big Short. Say you're at a poker table and you're betting, and like you're in a hand and you have, let's just say blackjack. You have ace jack, okay? Or let's say you have 10-8. So 18, and you're betting. Well, the people behind you will end up taking a bet if you're going to win or lose. And then the people behind them will then take a bet on them if they're going to win or lose. And then it keeps creating these synthetic bets where you're really betting on the outcome of the next person. And all that to say is Bitcoin is no longer 21 million supply, because now you can actually have a position of potentially holding not necessarily a Bitcoin, but just on the future price of it. What do you expect the future price of it to be? So it creates a synthetic aspect to it that no longer is restricted to 21 million. You don't need to own a percentage of a Bitcoin. You can literally just own, bet on the future price of it. So now it becomes this whole convoluted type of betting system where it's not finite like it used to be. And that's another thing I saw for a potential reason is now this is starting to unwind. And now all these big institutions are finally unwinding their positions. And so again, how true that is, hard to say, but I do see the reasoning with it. When the whole argument for Bitcoin was its scarcity, and now you're creating all the synthetic assets and different avenues of either buying Bitcoin, shorting Bitcoin, et cetera, where you don't have to actually hold a Bitcoin. You see what I'm saying? So it's a very interesting time we're in right now. I don't necessarily say that's going to be the end all be all for Bitcoin, but it's just something to keep in mind. And we'll look at the chart as well. And then also there's drama going on with the Epstein files and how he had ties to Satoshi early on, or at least they knew about Bitcoin in 2011. So there's all that going on as well. Just a lot of drama. But oil futures pretty much staying in this downward range. And then you have the dollar index, the DXY at 97.70. So continuing to rise here, whereas the inverse correlation with the S&P and crypto. Now, looking at the overall market. And again, if you guys have any questions, feel free to ask away, or if you want to speak, feel free to raise your hand as well, and I'll get you up on stage. But currently, Bitcoin's at 65.5K, down 6.8%. Ethereum's down 8%, 1922. And then Solana is down 12.5% at $79. So these actually had a good bounce from their lows. We'll look at that in the chart in a minute. But looking at the top gainers, MYX Finance up 10% to 651. Meme Core, 4.1%, 155. Rain, 3.1%. Hyperliquid, again, still a top 5 gainer, 1.9%. Bet on your winners, guys. That's how you last in this game. Bet on the outperformers. And then if you look at, again, some of the top gainers here, you do have some meme coins, but usually these aren't as accurate here as these usually change. So good to see at least that we do have some top gainers, even some double-digit performers right now. Now, something I was talking about earlier was the Fear and Greed Index. So it was 11 the other day. Now it is 5. Extreme fear. The last time we were at 5, I mean, literally this is the lowest we have ever been. Nico says 5 is insane. Exactly. 5 has never happened. I mean, I'm going to try to probably zoom out here. I mean, all time, this is on CMC. I can go to CoinGlass, actually. Let me go to CoinGlass and see if I can look at the Fear and Greed Index on here, because it's a different measurement than Coin Market Cap. Let's see. Yeah, I know. Even them, I mean, currently, what do they have? So they have 10 for their extreme fear. You could say for them, we were at 10 December 15th before Bitcoin had just a couple more days of down before relief bounce and then grinded up higher. And then we had 9 November 15th, but that was actually at 95K before we continued bleeding for another 10K. So yeah, it doesn't look too much better on CoinGlass either. And what this tells me, and let me just look real quick, we were at 10 February 25th of last year before we had a little bounce and then continue lower. So what this tells me all in all is either A, we're about to have a relief bounce in a few days, or B, we're going to continue going down for the next week. And that, I believe, would take us down between 45 to 50K. And so it's not really a fun spot to be in currently, seeing how low it is. Now, the fact that it's the lowest it's been on CoinMarketCap is also something to note. But at the same time, we've seen how low we can stay in this level, right? In this extreme fear level. So I would say it's a good time to DCA just based off the levels. But let's go ahead and check those out real quick. But let's just look at ETF flows and just see for today what they showed. So Ethereum, negative 80 million. Not too bad. Bitcoin, negative 434 million. So obviously, institutions are still not confident in Bitcoin or Ethereum. So Let's go ahead and look at Ethereum first, then we'll look at Bitcoin and Solana. So this is a trend line that I've had for a while, and this trend line stems from June of 2022. And you can see we've bounced here multiple times, and it's held since June of 2022. And you can see we nearly reached it at 1740. So a nice bounce from here. And this is why it pays to have, again, there's pros and cons with trying to knife catch here. But when you have these trend lines, if you trade low enough leverage and provide a little bit of breathing room, then it can be advantageous. Now, obviously we had a drop at least 4% below the trend line. So you need to be at low enough leverage if you want to try to range it from 1750 down to, call it 1680. So you're probably at 3x leverage, and then a stop loss probably down at 1620 or so. So that would probably be the play if you're trying to play these trend lines on the weekly, because when you look at the wicks, they've obviously gone down through the trend line, right? So you couldn't expect that it was going to get just before it and bounce, because it shows in the past it's actually wicked through it. So that's something I just want to tell everyone is if you're going to try to trade these weekly trend lines like this, trade low enough leverage where you can provide some breathing room, where you can provide your stop loss that's way below at least the average percentage that it does break through. You can put your stop loss below that. So that's what I would do. So for example, and real quick, we'll just take this. So on average, you can see that, okay, 2.91%, these have gone down below. And then you have right here, roughly 3.4%. And then this one did, okay, so let's say 3.4% is the average. So 3.4% below would mean you need to keep your stop loss at least below 1660. Okay, so 1660. So then you would just gauge it. Okay, if I have my stop loss at 1630 and my entry, I'll have between 1670 up to 1750. Then again, you could calculate it from there. Basically, from 1750, what would your stop loss need to be? And you can calculate your leverage from there and then accordingly play that. So that's how I would do it. If you guys are trying to play these trend lines, make sure that you allow some room based off the average percentage that it does wick below these weekly trend lines. Now,
Add something here.
Yeah.
Okay, cool. For me, I do my DCA on Bitcoin Ethereum with like 2 to 3x leverage for capital efficiency. And during volatility, I shore up the margin on these positions. So today I was fucking scrambling. Sorry for the words, but I was scrambling around to add some margin to my really long term position, because I was like, what if this dropped 50% and we hit like 1,200 on Ethereum in a flash? So I was just kind of worried there. I added a lot of margin, and I like to keep it way lower so that even like a 10-15% move down doesn't take me out. But it's something that's spoken about in the psychology of money, and they did a research that long term, if you have the stomach for it, if your entry is at like a 2x when you DCA and you don't get taken out, long term it's really advantageous for capital efficiency. But it's a bit more advanced strategy. Don't jump into this if you're not confident. But another thing you can do for capital efficiency, for example, I don't know, you have per tranche of like $1,000. You could say, okay, I'm putting like 750 in Ethereum, and I'm putting 250 in a spot beta play that will do well when Ethereum does well. So for example, you could put 250 in Aerodrome or Hype. So that way you're playing Ethereum leverage, but without the leverage. So that's a little trick for like capital efficiency, especially when we're really bottoming like this and you want to start building up position, because all coins are pretty much leverage position on the market. It's like betting on a bet and on another bet. It's like betting that the market will go up and that Ethereum will go up, that Bitcoin will go up, and then global liquidity will go up, and so on and so on. So maybe a little trick that can help you guys. Back to you.
Absolutely. No, great advice there. Absolutely. And yeah, risk management is so important, guys. And that's why we always say, find out where your stop loss needs to be, find out how much of a buffer you need, and then choose your leverage from there, right? Because Nico said he could stomach a 10 to 15% drawdown. And so what is his leverage there, right? Is it 1.5x? Is it 2x? Just calculate what you need. And also DCAing is a powerful strategy that a lot of people underplay. And let's just say, for example, if I post a trade say Ethereum long 1670 to 1750. Well, a lot of people will just invest everything at 1750 when price reaches that, where I would say get in the habit of, betting maybe 33% at 1750, another 33% at 1710, then another 33% at 1670. So you average in plus or minus around 1715. And so at that point, you've got a lower average entry just in case. If not, well, at least you got some of your position in there. And so, yeah, great advice there. Also, just managing risk and making sure it also helps with emotional stability, because if you know you have orders lower, you're not going to feel like you have to check the chart every time. You're going to feel comfortable. Well, you have your average entry. Then obviously you have your stop loss. You can preset, which not many people know, but if you're trading on Blowfin, you can actually preset your stop loss on your limit orders as you place them. And so make sure you get in the habit of doing that, because a lot of times with the way volatility's been, price can literally wick down to your entry and then maybe bounce shortly and then wick down again through your stop loss. And so making sure that you have your stop loss preset just in case you're asleep, then you're secure. Just like we had with Solana, stop loss at 87 ended up going down to 67. So that's exactly why we have stop losses, especially in these volatile times. It's usually better, and I say this, it's usually better to have hard stop losses versus 4-hour close or daily closes, because of how volatile and violent everything's been. You can easily get liquidated. And so I know people have different opinions on that, but just seeing how volatile everything's been, having a fixed stop loss may get you stopped out more, but also it's going to save you a lot more money during these volatile times, which also is a reason why we like to have wider stop losses and lower leverage during these times, so that chances are you won't get wicked out during these violent moves. Now, something else I wanted to point out is, so GE's indicator, Omega 369, if you guys do not have this indicator, he actually posted it in a, let me actually go ahead and let me see if I can find it real quick. So he actually posted this in in the announcements channel. So if you guys don't have it, then definitely go ahead and check it out in the announcements channel. I can actually see if I can post it. Or Nico, can you do me a favor and see when GE posted it in the announcements channel, or just search up, Trading View in the announcements, and then it should pop up and just link this indicator.
Yeah, I'll take care of it.
Appreciate it. So, because yeah, this indicator, as you can see, guys, literally on the yearly S1. So first of all, the yearly support, you can see Ethereum on the daily bounced exactly from 2262. And it bounced all the way up to a high of 2395. And then it broke through it. And you can see, where did Ethereum bounce next? The yearly S1 is at 1738. Ethereum bounced at 1740. So that's why GE uses these indicators. Because like I was mentioning earlier, the daily time frame isn't going to work when you're trying to catch these wicks. Even the weekly isn't going to work. You're want to look at the monthly or yearly. And this is exactly why. Because when you look at the yearly, a lot of institutions are looking at the yearly open, the yearly close, the yearly support, S1, S2s. And so thank you, Nico. Yeah, so Nico posted in announcements the Trading View link, and he can also post a link as well. But this is an indicator that you guys need to add to your favorites, because if anything, just betting at these yearly support levels or S1, S2, these are going to be money, especially, I'll go ahead and bring my drawings on. Especially, you can see here, if I have this trend line, and if we look at the weekly, right? So if you have this trend line and it's coinciding with this yearly S1, this green horizontal line, let me delete this teal. But you can see here, there's confluence between, what is that, 1723 and 1740. So if you were ready for this, obviously that would be a great trade. But this is why pivots are very important, actually. And I need to start using these more. I'm guilty of not using them as much as I should. But here, just looking at them again, it's very imperative to at least have this for confluence at the very least. Because if you have major support levels with trend lines, with your indicators being oversold, then okay, at least that's risk reward wise, it's going to be plus EV to bet at these levels. So yeah, that's a great example there of exactly reaching these. So let's see where we're going to go from here is also the big question. Now for Ethereum, I'll go over Bitcoin and Solana in just 2 seconds. But for Ethereum right now, the big level everyone's watching is 2000. Okay, and I'll actually post, or not post, but I'll draw a little resistance line. And so here we go. So right here, so around this 1975 to 2000 level. And if I take this rectangle away, you can see this coincides with the weekly S2, which is going to be resistance now, and then the monthly S2, which which is going to be resistance as well, right? So there's already weekly support 2 and monthly support 2. That's going to be support turn resistance on Ethereum. It's going to provide some resistance there. Also 2000 being a psychological level. That's also going to be a big level to watch. And so if any of you guys are in an Ethereum long right now, I would definitely take some profits as we approach these $1,975 to $2,000 levels, because, I was speaking with a few people, Nico, Ed, and a lot of them are waiting until we can change market structure. And that's the big thing as well, is whenever you have price dropping like this, and let me go ahead and scroll up on a black screen so you guys can see this. So whenever you have price just literally, barely having a relief bounce, crashing, barely having a relief crash like this, what you want to look for is you want to look for price, obviously, to reverse, and then when it retraces, to make a higher low. Then retraces, make a higher low, etc., right? Then you have this nice little uptrend here. That's what you want to look for. We have not had that yet. If you scroll down to where price is at, let me hide everything. If you scroll down to where price is at, you can see on the daily, literally just been, since January, we've basically just been declining. Any bounce has been getting sold off into. Okay. And even if, I'll go ahead and look at the end of December. Okay. We started to have some higher lows, but what happened the moment, and you can just visualize the upward trend line here. What happened the moment this trend line was broken? These higher lows were broken. Then we started entering a downtrend. Then we started making lower highs. And that is a downtrend, right? Making lower highs. And that was the signal. Once we broke this uptrend and making higher lows, that was a signal, okay, now I need to start looking for shorts. And then at that point, that's when we just fell off a cliff. And so it's really is as easy as just looking at market structure when it's broken, favoring the downside. And so I would say I underestimated how little we would bounce. And at that point, we really didn't have many relief bounces. I mean, one very small, and then we just crashed. And so at that point, patience is paramount during these times. And we're seeing that clearly. But at the same time, we're seeing that no matter how bearish, these levels are still being respected. These major yearly or monthly support levels are still being respected. And so that should give you some, solace in the fact that, okay, this isn't completely just random. There is a method to the madness. And we'll keep you guys, again, informed whenever these levels are being approached. GE has this chart analysis stream on Sunday. We have our streams throughout the week. And so this is something where we want to help you guys out. We want to make sure you have enough knowledge. And that's why we provide you these indicators and why we continue to have these live streams, because we want to make sure you have the knowledge to navigate this landscape. Even if you don't trade at all and you're just waiting, the reason why price is bouncing at certain levels, why there's demand at certain levels. And even the volume profile, I mentioned I would show you that as well. So let me see if I have that up here. I do not have the volume profile. Actually, yeah, I think I have it up here. Okay, so here's another, and let me actually show you how to get the volume profile indicator. So just go to indicator on TradingView, type in volume, and then you can type in profile. Okay. So there's two halves. So you have fixed range volume profile, visible range volume profile, session volume profile. Now, visible range is on the right here. You can have fixed range, and fixed range is one where you can actually, I know GE likes to use this as well. You can actually take a range. So I was taking April of 2025, dragging it all the way over to the current level. And you can see here that it gives you an idea of the current demand. And I can actually zoom out here. And I'll go ahead and I know there's a lot of lines. So let me go ahead and go on a different chart because I want you guys to be able to see exactly what I'm looking at. So let's go ahead and go on. Let's just do KuCoin for a second. Okay. And then we'll take off all these EMAs and everything. Okay. So you can see clearly right here where the demand is at, right? So you can see there was a lot of demand at 25.20. We broke that and we just fell off a cliff. And now you can see there is a little bit of demand. You can see where this volume is. Where was the biggest volume bar after this 20? I mean, this level here was 22.20. After this level broke, well, the next biggest level here was around 1750s. And that's where we bounced before. Okay. And so the visible volume range and the session profile is a good area to look at as far as supply and demand. And so that's, again, just another metric you can use. I know a lot of people use these fixed range volume profiles and they actually see, okay, where's most of the demand at? Once we break these levels, where should I be bidding after, 2520 has basically gotten torn through, and then 2400 has fallen. So the biggest one is around 1750, and that's where the confluence comes in. But what I will say is just find indicators that you're comfortable with using. Don't feel like you have to use 10 indicators. Find one that you're comfortable using. If it's just EMAs, support resistance, and RSI, stock RSI. Okay, fine. Find ones that you can use. I recommend GE's pivots indicator is a very, very good one. And so at least having some of the basics down, that's going to help you find those major SR lines. But seeing, if you have confluence with other indicators, that's going to help you determine, okay, where is the next big level to bid at? Because during these volatile times, you don't want to be bidding on the 4 hour or the daily when you're trying to long. You want to look at the longer time frames. But okay, let's see what else we have. Let's go ahead and look at Bitcoin real quick. Let me take off VPVR now. Even you can see Bitcoin here. I mean, there's not much here for the range, and that's because we measured. Let me go ahead and actually. Okay, there. See, if I zoom out, the session range one automatically adjusts. So you can see how much volume there was here at 60K. I mean, you can clearly see how many people were bidding at this level. And so that is just a clear indication there. I can go ahead and take off the session range one, or the fixed range actually, if we have it. Let me go ahead and delete it. There. Okay, so this is why I like the visible range volume profile, the VRVP, because you zoom out and it actually takes what's on your chart and it shows you where all of the volume is, and it gives you a clear bid zone. So very, very good indicator. But like I said, this is something, and let me go ahead and link this actually as well. I want to make sure you guys have these indicators. So let's go ahead and let's see. I'll have to actually, it's a trading view built in, so you have to search for it, but just search visible range volume profile. I'll type that in. There you go. Perfect. So where are we looking at for Bitcoin? What are we looking at here? Well, we had 60K as a level to watch. This was a level I was watching, posted on my market update the other day, but you can see we bounced perfectly off this. Now, why 60K? Well, one, we bounced a lot in the past. It's been resistance support. But two, looking at the SMA, the 200 weekly SMA. Now, this is an SMA that Benjamin Cohen has made very popular, and he actually posted about it. Let me go ahead and go to his X account and show you. And make sure everyone is following Benjamin Cohen. Great, great guy. Great, great guy. Has a lot of good analysis. Now, if I look at, there was a chart he posted where he basically showed that, yeah, here we go. So every cycle is the same, and he said crypto could bounce, but when Bitcoin drops below the 50-week moving average, it then goes to the 100-week, spends a little time there, and then goes to the 200-week moving average. And this was a clear example of it here. So you can see back in 2018, it went down to the 200 SMA, and then back in 2022, it went actually below the 200 weekly SMA, rejected off it as resistance, and then continued even lower before finally getting above it, using it as support, and then going higher. And so the 200 weekly SMA is at 58K, what we just showed. And so you can see either it's bounced off of it or wicked below it and gone lower. And so that's why it's very, very important to have that on your chart as well. Because let me go ahead and open the Binance charts, or actually Coinbase is going to have even more history. But you can see here that how often, right, prices bounce from here. And so if I go ahead and hide the drawings, I mean, you can clearly see price bounced in 2018, price bounced in March 2020 before continuing higher, broke through, used it as resistance in 2022, and then finally, once it broke back above, it sent, right? It's using it as resistance, turned support, resistance again, and then once it broke back above it, it just flew. So now the question becomes, well, are we going to continue lower down to 58K and bounce like we did back in 2020 and 2018? Or is this going to be more like 2022, which a lot of people are comparing this cycle to, because we made the higher high before rejecting and then having this little complacency shoulder and then rejecting down. So more times than not, I mean, most likely we'll probably have this kind of drop. Now, if we do, how low are we going to go? Well, this is why I drew this retracement here from the highs, just candle closes, not wicks. We went down 75% in 2022. This time, if we go down 75%, that would bring us down all the way to 30K. That's why I have this down. So this would be the extreme bottom if I had to place a target. Now, if that's the case, obviously that'd be way lower than we went below the 200 weekly SMA in 2022. That would be, let's just say, how much lower? When we broke below it, that would be 30. So we broke below 30% in 2022. If we go down 30%, that would be 40K. Okay, so technically 40K wouldn't be a bad level. You can see it lines up with support back in 2023. So I'm open to the idea that we're going down to 40K. I'm still open to that. And that would be a low target for me where I definitely would be bidding. I know a lot of people will be looking for 30 at that point, but 40K is still a possibility, especially considering bear markets usually last for a year, which would take us into October of this year. So again, a lot of uncertainty, but we're still betting when risk reward is on our side. And obviously, if we make higher lows and we change market structure, it's going to change that. But just keep these levels in mind. This is more so for your awareness versus saying we're going to go there, but it's just opening the possibility that we could go that low. Lucas says, I believe the fib 618 is around 57K. This fib is from last bear market lows to all-time highs. Very, very interesting. That's an interesting one. Maybe we can have that as well. Get that fib going. So let's see. Okay. Let's see if we have. Yeah, 618 is going to be, 57K, like you said. Very, very interesting. For those who aren't aware, the 618 fib is very accurate. They call it the golden pocket between the 6.5 and the 618. What that means is price is retracing 61.8%. So these are all percentage retracements. And so that's saying from, the close of 123.8K, 68% retracement is going to be around 57K. And that lines up, perfectly with this 200 weekly SMA. So this is what I'm talking about, is the confluence, right? And thank you, Lucas, for sharing that. So when you have confluence with a 200 weekly SMA with a 618 fib, the golden pocket area, that's also something to keep in mind. Okay. And then also I may see another one here. And again, I know there's so many lines drawn on this, but I'm looking at another potential. Could this also be something? Again, this green line, you can see from July 2021, we bounced off of it, wicked down 2022, rejected off of it in 2023, and then nearly bounced off of it in 2024. And look where that intersects at about 57K. So there is some confluence here as well in this trend line. Okay, so that's also something. So if we do have a further drop, 57K to 55K could be a nice level to bid. And also, you can see 54.4K lines up with this major support on the weekly of September of 2024. So this is what I'm talking about. When you have horizontal confluence, trend line confluence, fib confluence, weekly EMA confluence with a 200 weekly EMA, which is a long-term confluence, right? So this would be a big level to bid, around 55K. 55 to 57K, great level to bid there. I'll definitely post some longs there if we get it. Nico says, I like to bet and start scaling heavier around 10K above the popular zone area. If everyone's calling for 40K, well, 50K is a better target, in my opinion. Just a little bit of game theory. People tend to overshoot tops and bottoms. Look at the calls for 140 to 150. We had that at the top, usually way off at 15K. Everyone's calling for 4 to 5K or at least sub 10K. Exactly. Yeah, and I like that you mentioned game theory, Nico. And everyone should also be aware of game theory because it's a term that basically, in layman's terms, it just means you're trying to predict what the next person's going to do. And you're trying to front run them, for lack of a better word. And so, for example, like Nico's saying, if everyone's expecting 40K, chances are we're not going to go there. Chances are we're probably going to front run, maybe 45K, maybe 50K. Maybe we're not going to quite get there, right? So you're literally trying to think layers deep. And it goes even, you can see when you have buy the rumor, sell the news. So let's just say back in the day, whenever you had a mainnet that was launching, let's just arbitrary date, December 15th. Okay, mainnet was launching for a token and the token started pumping a couple weeks prior. Well, normal people would buy whenever mainnet is launched because they think it would be a catalyst. Level 1 game theorist would then sell on the news day because they knew that it was priced in. Level 2 game theorist would say, well, I know these people are going to sell on the mainnet day, so I'm going to sell a day prior. And then layer 3 is going to say, well, I know that they're thinking they're going to sell a day prior, so I'm going to sell 2 days prior. So you see what I mean? It's literally front running what the next person's going to do and trying to think layers deep. And that's all what game theory is about. Similar thing with chess. You're thinking what the next player's going to do. If you make this move, they're going to make this move. So you're going to make this move. It's literally just a game of trying to predict what the next person's going to do. So yeah, great analogy there. But yeah, so all that to say, go ahead, Nico.
If I may add, yeah, I just want to add a little something there. It's like right here, the uncertainty in the market has people overshooting their targets. And I did shoot a little too early there, but I think most and many are overshooting, especially if we watch Fear and Greed. It's at 5, it's completely insane. So maybe Fear and Greed can keep going up, say at 8, 12, and then price can bounce and again go lower. That's not out of the loop. But if we're making kind of like bullish divergence, sort of use the Fear and Greed as an RSI indicator and see where's the divergence with the RSI and the price, then that's a good account on where things can turn back. But I think market has a tendency during uncertainty and greed, fear and greed, to either overshoot the upside and overshoot the downside. So if you can kind of front run that, I think it's better to execute than to be paralyzed by perfection. That was my main mistake when I started out. My first couple of years, I was just trying to nail every move so precisely. But then I understood that execution and buying sort of like around the bottom area and selling sort of like around the top area was making me so much more money. Back to you.
Hey, absolutely. And thank you for that, Nico. And that's, again, another point is there's a good quote that says, imperfect action is better than perfect inaction. All you have to do, just do something, right? Instead of freezing, waiting for the perfect opportunity, waiting for the perfect time. This is never going to happen. Either it's going to get front run, or it's going to get blown through. But if you can at least look at the probabilities, look at the confluence signals, look at the indicators and say, okay, this is about a 90% solution. I'm going to bet here. I'm going to start DCAing because there's a lot of uncertainty. Everyone's scared. And you just, calculate in your head if it's plus EV for you to do so, then at that point, that's the best you can do, because most people right now are paralyzed by fear. I guarantee a lot of people did miss the 60K bottom for Bitcoin. And so it's because when things seem the worst, that's the best time to bet, right? And yes, you may miss it. Yes, knife catching isn't the best, but it's a game of probabilities at the end of the day. And so over time, if you're taking these plus EV trades, these RR trades, risk reward, that are in your favor, then you will end up winning. But it's just consistently doing that that's hard for most people. They can gain the courage one time, but if they lose, it's much harder for them to do it again. And if they lose again, it's much harder for them to do it again. And so you need to be constantly measuring the probabilities, constantly looking at your levels and saying, okay, I'm going to start slowly DCAing in. I know this, a lot of people are telling me, no, it's going to go lower, but all of my indications say this is a good area to bounce, and then just bet on it. And usually that's what happens because most people aren't expecting it. And so that's a great point that Nico mentioned, is don't wait for the perfect time, because more times than not, it's not going to happen. Like, trading isn't perfect. No one wins 100% of the time. But if you're consistently betting when probabilities are on your side, then you will become profitable. And that just also goes back to managing your risk appropriately with your leverage, stop losses, portfolio allocation, etc., and looking for those outperformers as well. But yeah, great points all around there. And talking about indicators real quick. So looking at the RSI here, it is getting oversold on the weekly. Right now it's 28. Now, if we scroll back, the last time it was oversold was 2022 during the bear market. What happened? Well, we had a small bounce the next week. And then after that, we had another drop. and then we had a relief bounce for a month and a half, and then we had a further drop. Now, all bottoms, I should say most bottoms, end up forming with bullish divergences, like Nico was saying. So if you see the RSI here in 2022, it formed a bullish divergence where price actually made a lower low. So you can see it bottomed out around 16K, where the RSI was making a higher low, meaning there is a higher amount of relative strength when price is lower, which means that's when you get the elastic band effect. You have price eventually going back to the mean and filling in, you could say, this gap of demand where it actually reflects it. Whereas this is just fear selling. But once you get that big red candle afterwards, forms that bullish divergence, and then you finally have that confirmation with a weekly close, then a couple weekly closes above that, and then you can see price just took off. So more times than not, what we're seeing here, I mean, it's a crazy amount of selling, but most likely what's going to happen is we may end up, coming down, having a little bit of a bounce, coming down a little bit more, chopping a little bit, and then, end up forming a higher low as price potentially falls lower. And then at that point, price bounces, right? And then we have where that's going to be around 50 to 55K when we make the bullish divergence, where that's going to be even lower. Look for the bullish divergence on the RSI. The weekly RSI would be a great signifier. And it could happen next month, could happen over the next 4 months, but look for that bullish divergence on the weekly RSI, because that is a good indication that a bottom is reached. So yeah, great point on that. But for
Holy
now,
shit, guys.
good.
Breaking news. I talked this morning about AI agents, and I spoke in the chat to invest in AI agents. I was telling people, look on Base, look at Virtual, look at Dreams, look at Banker, and Banker just pumped like crazy. It just went like 200%. Someone pushed that, so it had a candle of 200% for like a minute there. Now it's back at 20%. I don't know what happened there, but crazy candle on this. That's insane.
Wow. Yeah, that's a great point. Again, it's when you can find these narratives and you find these strong tokens, strong protocols with actual use case, then yeah, you can actually make a lot of money. And even real quick, I know we're kind of talking about a lot of different things here, is War is another token I was watching, and is a token that usually bounces around the 16 mil level. Now it's at 20.47. It's really been performing well. And this is when you can actually have memes and lower cap tokens do fairly well in markets, and they can actually be a hedge in their own way. Now, this is an anomaly because there's a lot of KOLs behind this, a lot of big people. They have some big marketing coming up, and so that's one of the reasons why. They also have supply control. But there's just another thing where you look for those strong performers, look for those performers that have some catalyst ahead and are actually, really just holding strong relative to the overall market. So yeah, great point on Banker, and then War is another one, but there's always opportunities in the market is what I'm trying to say. Is, it doesn't have to be all doom and gloom. And what I've learned is most growth, I would say personally, is, formed in a bear market, or formed when we have these huge crashes, because people are forced to reflect, one, on their own strategy, but more so on their self, of like, okay, have I been doing stuff wrong? Have I been not managing risk appropriately? Was I too overexposed? Was I investing in too many things? I mean, that's the questions that end up arising whenever we have these big drops, and it's a good thing. I mean, I think even myself, I've kind of reflected back on some of the trades I made, and was I too quick to jump the gun, right? Was I too quick to make that long call? Should I have waited? Should I have waited for a reversal? I mean, these are all questions you should be asking yourself, because it's about making you better at the end of the day. And it could be even as simple as, okay, I'm gonna start getting to sleep on time so I have a better routine. I'm gonna start, getting everything done before X time, so then I'm able to go to sleep at X time, right? Like, there's just little things I think the bear market actually makes you realize, and it's very, very helpful if you can view it that way. Getting motivated, because there's a thing I was talking earlier. You can either be angry and motivated, or angry and depressed whenever the market drops like this. And I think using that anger as motivation is so healthy, because at that point, then you're that much more prepared when the market turns to the upside, and you're much more prepared to deal with it next time it happens. And so I think it's again, there's always positives to take out of everything. I'm always an optimist. I'm sure Nico probably has some things to share as well.
Yeah, sorry guys, I got excited there for a second. I just opened TradingView and got an alert, and I seen bankers going 200% in a single candle, kind of retraced. So I guess it's a big whale not putting on slippage properly or something weird. But there's a lot of opportunities in this market, and the market doesn't go just one way. And someone in the chat today said I was like Morgan Freeman, the voice of calm and reason. Just see it at both sides. There's ways to make money both sides. And if you can identify and be early in narrative, like I have a lot of conviction in the payments narrative, in the AI agents narrative, and there's a crossroad between the two. I think this will play out very nicely. Back to you.
Absolutely. Absolutely. And real quick, just looking at Bitcoin here, because I talked about the pivots indicator, make sure you guys add that to TradingView if you haven't. Nico linked it. I'll go ahead and there you go. I just posted in chat where he linked it. Just click on that and you can add it to your favorites and add it here. But basically, you can see this yearly pivot. I believe, hold on, let me go ahead and open it real quick. Okay. So I added it here, and let me go ahead and take away some of the drawings so it makes it easier for y'all to see. So you can see here, I was talking about yearly pivots and how price bounces from them. So you can see the yearly S2 was at 64K, and then the monthly S3 was at 61.7K. So this was a strong area of confluence, right? When you have these two levels here, in addition to with the 200 weekly SMA, which is 58K, which did get front ran, what we talked about earlier. And so, and then right now you have the weekly S3 at 66K. So when you have all of these high time frame support levels within, what is that, 10% of each other, less than 10% of each other, and that shows you, okay, there is a lot of confluence here. And also, I mean, like I said, the yearly should be the first and foremost what you should be looking at when we have these large drops. Even Bitcoin bounced off its yearly S1 initially. You can see it bounced from 76.2 all the way to a high of 79.3 before it crashed again and then ended up, bouncing just below it on the monthly S3. But still, if you would have longed at 63.9 with enough of a stop loss, then you still would have made some profit there. But nonetheless, I think having a range DCA, like we were talking about earlier, so that you're not completely underwater and keeping your leverage low, you'll still be able to catch some of this move. But for now, what I'm watching as far as resistance levels is, really, let me go ahead and pull it up on the Bybit chart. And then we'll go ahead and see what we're looking at here. So let me go on the weekly. So yeah, so right now there's a big support zone that was 67 to 71K. And this is going to be a big resistance area because now you can see we have the monthly S2 and the weekly S2, which is support turn resistance between 70 to 72K. And so if we look at 2024, the previous high was 71.8K. So that's going to be a big resistance since we crossed below it. So the weekly close is going to tell us a lot in the next few days, but I do believe there's still some uncertainty. And you can see here, even with the daily, we're reaching, the 67.1K level. So I would definitely take some profits up here. There's still a high chance that we could go lower, but a lot of it's going to depend on a few things, such as the US-Iran talks today, if they're productive or not. And then next week, with the whole government shutdown, if it's going to happen by February 14th, because there is a Polymarket poll, which I'll link as well. Right now, it's a 48% chance that there's another government shutdown, which I'll post that in the chat as well. So keep an eye on this percentage. If another government shutdown happens, going to be some more FUD around it, etc. So this is another uncertain item that you need to watch out for. But at the very least, at least we are getting a good bounce from that 60K level we already talked about earlier, trendline confluence, pivot confluence, also the 200 weekly SMA confluence, etc. So a lot of confluence levels with this. But if we do lose 58K, then we already talked about potentially low of 40K. But I don't think we're going to get that low. I think, as we were talking about earlier with the fib levels of the 618, around 57 to 56K, it's going to be a good level to bid if we do get there. So that's going to be the next big area I'll be looking at. But finally, let's go over Solana. So Solana had a nice bounce from our support zone. This was a support zone I talked about in my stream yesterday in the market updates. And so if you were ready to bid here between 70 to 75, now we're already at $80. And so this is why it pays to have your support zones drawn ahead of time, because then you can be ready. Okay, yes, we got stopped out at $87, but then what's the next big area? Well, 70 to 76, okay? And so now you'd already be in a nice little profit. So again, what does that line up with? Well, the weekly S3 lines up at 76, and then the monthly S3 is at 64. Didn't get tagged quite yet, but the yearly S2 is at 47. Now I'm hoping we don't get down here, but if we do, you know where to bid, because what's also at 47? Well, the previous high, August 15th of 2022. So you can see where the confluence signals are, right? This 45 to 48 level is going to be a big level of support if we do come down here. So that's just another level to watch out for. But for Solana right now, what I'm looking at is I'm expecting 88 to be resistance. Why? Because if you zoom out on the weekly, you can see we bounced from 88. So that's support turn resistance. Okay, so that's the big thing to watch out for. Also, it coincides with the weekly S2, now turned resistance. And so we'll have a lot of resistance near 88 if we can get there. But if you're in a Solana long right now, then I would say probably put your stops to break even in case we do end up coming back down. But these wicks here are also at $80. And so I would just be careful if they do turn as resistance as well. But yeah, looking at the indicators, I mean, a lot of weekly indicators are oversold now. The RSI is almost there. The last time Solana was oversold on the weekly was November of 2022, where we had a small relief bounce lower over the next month. And then finally that marked the bottom, which what we were talking about earlier is, potentially you do have bullish divergences form. This one we had slightly lower before higher. So Solana didn't quite get that bullish divergence before marking a bottom, but Bitcoin did. And I believe Ethereum did as well. So again, that's why I said 90% of the time it happens, not all the time. And so that's something to look out for as well. But yeah, interesting. We may have a little relief bounce, same here. They may have some bleeding if there's continued uncertainty with the government shutdown and other factors as well. So that's why I say still take some profits on these bounces and then have your stops at break even. Lucas says, do you think this could be a shorter bear market? That's a good question, because a lot of people were expecting, these lower levels, but not this soon. I was expecting these probably by May, not by the beginning of February. And so is that to say it's going to be a shorter bear market? I don't necessarily think so. I think that having topped out in October was, you could say it's just another argument. And let me go ahead and pull up Bitcoin so you can see the actual. So Bitcoin topped out in October, right? So 4-year cycle, it still stayed true. So if we're staying true to the 4-year cycle of topping out in October, well, we bottom out 1 year later, which would be October of this year. And so I don't necessarily think that we're going to bottom out right now, but I do think it's possible. Yes, we could have a little relief rally, but I still think we'll probably put in lower lows. And again, the whole question of, well, we're at the 200 weekly SMA, but if this is truly 2022, then we could end up going a lot lower below it. So that's a thing where you have to keep in mind as well. And so I think that what could happen is likely we'll have a relief bounce and then maybe consolidate around these levels for a while, and then finally start pumping afterwards. I think that's more likely, consolidating for a few months versus straight V reversal. And then this was the bottom and now we're just going higher. It's possible. I'm not saying it's not. But I think that things start to line up when you have a new Fed chair in. He's coming in, I believe, May 15th. And so when you have that date drawn here, May 15th, at that point, maybe he could talk about cutting rates, and then we start a little pump, maybe consolidate a little more, but then really start going, and then, okay, yeah, that's the bottom. And then we're going higher, right? And so I think it's just going to be a lot of uncertainty. Remember, we do have the November midterms of 2026, which that's also another interesting factor that comes into play. But yeah, so that's going to be something I'm watching, but I don't necessarily think it's just up only from here. I think there's going to be some consolidation as there's still uncertainty in the market, government shutdown, US-Iran tensions, etc., tariffs, all that. But I do think that, yeah, we'll probably have some relief rally here and then consolidation for now. But yeah, we'll definitely hear about institutions that got blown out and about more things that are happening in the background that aren't really known at the moment. I do think a lot of things are going to come to light. And I think there's more than meets the eye with this drop. I mean, because this is definitely not natural to drop this quickly in this short amount of time. I mean, most of these drops usually take a while. So yeah, very interesting to see this drop here. Let's see. Awesome. With that said, does anyone else have any other questions? I know some good engagement today. It's got a good audience, 12 people. So appreciate you joining. If anyone has any questions, feel free. And of course, Nico, if you have any other comments, feel free to chime in. But I think that we've really covered a lot here. And I think, this was over an hour stream. So a lot of good information. At the end of the day, the weekly close is Sunday. Going to tell us a lot. The 200-week SMA near 58K is a big level. And so keep this in mind with also the fib at the 618 fib that Lucas mentioned at 57K, 56K. And so it's going to be a big level here if we can hold these levels down. If we do end up going lower, it's going to be a good area to bid. But the big thing is going to be today, US-Iran. I'm going to see what talks are covered and if they come to some type of resolution. And also at the same time, for any government shutdown news, if the odds continue to rise, currently 48%. So that's going to be another item that could affect the market. But yeah, so just big things I'm going to be watching. So we're going to take one step at a time. We're going to play it level by level. We're going to take both sides of the trade, so shorts and longs. But we'll definitely wait until the risk reward is on our side, and then we'll be vocal about that and our reasoning accordingly. So that is all I have for today. But I just want to thank everyone for joining. This is recorded, so I am going to post this for the next 30 minutes. So if you missed it or joined late, then you can probably watch that in the recordings channel. And thank you guys so much. Hope you'll have a great week and talk to y'all soon. See you.
Thank you, everyone. See you.